Federal Reserve Chair Jerome Powell on Wednesday once again hinted interest rate cuts are on the way amid a backdrop of economic uncertainty and concerns over a commercial real estate-driven banking crisis. Shin Se-byuck has the details.
U.S. Federal Reserve Chair Jerome Powell has indicated potential interest rate cuts in 2024. Testifying before Congress on Wednesday, Powell reaffirmed plans to cut interest rates within the year, though he did not pin down an exact timeline.
If the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year.
Despite this, Powell adopted a cautious approach regarding rate reductions, emphasizing that the 2% inflation target has not yet been met.
But the economic outlook is uncertain, and ongoing progress toward our 2% objective for inflation is not assured.
The Fed chair also noted that the U.S. economy is showing no sign of an imminent recession, saying that restoring price stability and achieving maximum employment must come before lowering interest rates. Powell's remarks at the December 2023 FOMC meeting, which were made public in January, suggested an end to the aggressive rate hike policy the U.S. has been following. At that time, FOMC officials anticipated 3 rate cuts, each by a quarter percentage point by the end of 2024, while the actual policy path would depend on how the economy evolves. Following Powell's testimony, U.S. stocks closed higher on Wednesday, breaking a 2-day losing streak on Wall Street. The Dow Jones Industrial Average saw a 0.2% rise. The broader S&P 500 index advanced by 0.5%, and the Nasdaq Composite climbed by 0.6%. Meanwhile, concerns over a U.S. banking crisis triggered by commercial real estate issues were addressed by Powell as well. This was in the context of shares in holding bank New York Community Bancorp dropping nearly 40% on Wednesday, following news that the bank had downgraded to below investment grade due to bad commercial real estate loans and was attempting to secure new funding. Powell acknowledged this as a significant challenge, but reassured that it was manageable and unlikely to impact the wider economy significantly. Shin Se-byuck, Arirang News.